All right, so today we're going to be talking about today's price action, a trade recap on a day that I didn't actually take a trade, what my thought processes was, potential trades that I could have taken, why I didn't take them, a little bit about psychology. We'll go into everything here now. So market opened up. We were marking out these levels over here, these recent lows. When market opened, I can show this in the 15-minute. What was this? Right over here. This up candle, right as it printed and closed, that's when market opened up. So we had these very obvious lows and a draw into a 4-hour fair value gap. I mean, like pretty much clear as day where the draw was, where price wanted to go. And I kind of told myself that before I got into the market today. That being said, I watched these candles print. This was on the 5-minute. Before market was even opening, I was watching us print this candle. We then made, with the market open, a big Drake candle, big down print, right? What does that give us? A fat fair value gap. Now the issue here when this happened was when you get this kind of big print, you're already looking for shorts. You're already looking for a draw. You already know where the market wants to go. Since the beginning, we always knew where our market wants to go, and all we're looking for is a clear entry, right? Here, although this is fairly clear, oh, so this is a long position. This is fairly clear as to where market wants to go. You viably can't take this trade. So if we target this low here, stops, the only viable place you want to put your stops is somewhere up here or even on the wick here, right? Would that print? Yes. Look at the R though, 0.26, right? You're risking 4 times as much as you are making in this trade. That's not viable. So I saw this and I go, man, trade's basically a void, but let's see what happens here. We get 4 pretty strong green candles printing up here. We also had a 15-minute marked out, I'm pretty sure. Yeah, this 15-minute marked out here, which we tapped into earlier before in pre-market. We get this strong print up, and then on this 5-minute, we get the most crazy wick out, just a freaky ass wick out. That kind of pushed me away from my confidence in getting these shorts. And in my mind, we have 10 o'clock news today, which is what I was also looking for and kind of waiting for. Not that being the real reason as to why I avoided a trade, but being one of those things in the back of my mind that, we have 10 o'clock news, volume and price action are going to be influenced because of this. It's a red folder, orange folder. What else are we looking at here? So yeah, we get these 4 bullish candles printing out, and right after that, as we dig into the 1-minute fair value, yeah, we get a massive sell-off, a massive, big, thick, juicy candle right over here, and we can actually mark this out. High here, low here, 161 tick candle. For anyone who doesn't trade, that is a lot, right? $40.25 in a sell-off on a 1-minute candle. In 1 minute, the market dropped $40.25. That is pretty good conviction that price wants to reach these lows, right? Now, as I'm watching this, as I was seeing this print, what was my issue here? SMTs. Now, this is something that I have to work on because this is kind of a new model that I'm trading and I'm looking into. And that's why I'm making these videos to kind of just do it with you guys and show you my experience and what I'm going through here, and share everything and be just fully honest and laying it all out. The issue here was I was looking at ES, and this is kind of the biggest thing with trading is analysis paralysis. You hear this a lot. You have so many confluences in your head telling you where market wants to go, and if it's not like abundantly clear, you have one opposing confluence. That's when you get this doubt in your mind and that fear of if I enter right now, it might not go where I want it to go, and that one confluence might be the reason why. So yeah, here we had these highs, and we actually at that time we didn't even break this one, right? So that was a current SMT here and one forming on NQ, right? And because NQ wasn't the lagging index, it wasn't going to be a terrible trade regardless. But my issue was if that SMT printed on that 1 hour, we could see big loss. Now, another issue is it's on a 15-minute, but yeah, if it's on 1 hour, the only way that prints is when 10 o'clock hits. And this was at 9:35 or something. So we had a solid 25 minutes just to take this trade. And with market open volume, that wouldn't have been an issue, right? So this is kind of just in this moment, in this short term time, I easily convinced myself out of this trade. And one of the big reasons for this is because when I started this model, for one, I got really familiar with taking longs. So I took a lot of longs in backtesting. I backtested for some reason months that were always at all-time high. So for the majority of my trades, I think it was like 90% of my trades, all longs. So I got really familiar with longs. And even if you look at my Instagram and my previous trade yesterday, and any trade that I took that I've recently posted, literally every single one of them was long. So I'm very familiar with longs. What I'm not familiar with is shorts. Kind of a dumb excuse. At the end of the day, I've been on the markets for about a year now. I do have that experience. But it's one of those things where it's like, I'm now in live market. I now have money in this. Am I willing to risk it on this short when I haven't had like a decent amount of experience here? So now one of the other things I want to talk about is After starting this model, I had a lot of winning days. I had good days, and I got to a point where I got really close to passing my three evals on MFF. That being said, I played it really dumb where I could show you this right here. This was the trading curve growth. And at my peak, my balance was at $52,968. What does that mean? I was just about $30 away from passing my funded account, and there was two more linked to this. Now, don't call me dumb here. Two of those were a lot further behind. This was the one that was actually tracing and the highest on that draw. But the other ones were, I think, one was 500 lower, and the other one was about 100 away from the draw. Now, what could I have done to make this, simpler for myself and save my psychology when I was taking these trades was unsync them because I use TradeSyncer. I could have unsynced them, took in my actual trade that I lost on Friday on the account that was further away and kind of sized down, or I could have synced the two that are closest, sized down a lot, took maybe 4 micros, 5 micros, um, and just targeted recent highs, recent lows, and trade how I usually do, right? And minimize risk a lot. But for me, I kind of got into my own head, and this isn't really against my trading strategy because this was a part of my trading strategy. This was something that just I wanted to see was passing these three fundeds all at once. So on Friday, I took that trade where I got instantly liquidated. And it was a good setup, but that's besides the point, right? The setup didn't go my way, and because of that, I took these three accounts, and instead of them being real close, they are now significantly further, right? So now I took two losses after that day. One setting my balance to 51.7, and then the next one setting my balance to 51.12, right? So now I'm kind of back at that halfway point. And this is where the fear comes into it, right? So here I am having these two losing days back to back. Now, like if you zoom out and see things from a further perspective, if you're profitable, you're profitable, right? These losing days won't matter. You'll have winning days, you'll have winning streaks. You'll also have losing streaks, but they won't matter in a sense of a larger grand scale. So, but while you're trading, that's kind of the biggest issue is that psychology and you getting back inside your head and telling yourself things that you really shouldn't be saying to yourself because you should just follow your structure as far as your trading strategy goes and you play along with that, right? So here, great shorts. A lot of people in the Discord took these shorts. Shout out to Cole in his Discord. A lot of these people took these shorts. So right here, great entry off that close. Take a market order and just target these lows. And I even saw some people. That's a 1.7 or 1.07, 186 ticks. Huge trade, beautiful trade. I saw some people actually target these lows too, which again played no break even, played really well. There was also people taking other entries at I think it was this candle close here. So a lot more conviction here. Now the reason I didn't take this one after taking the previous one was for one, FOMO is something that I'm working on. The reason why I lost my trade yesterday was in some sort of sense FOMO, right? This is the move. We made the move. This was 670 ticks, huge sell off. We made the move right. Is there something stopping us from making a bigger move? Kind of. Yeah, we have a 4 hour here, but market open, a lot of volume, news coming out. You know what? You could expect to take these lows, but it's not as certain as it was before. And that's kind of the biggest thing is when you trade off of certainty, right? And when I trade off of certainty. So I'm looking for market to take out liquidity, recent highs, recent lows. It's solely based off certainty and how certain I am of that happening. So when the market was opening today, I was very certain we were going to take these lows. It was just about me finding an entry for it. And today, my confluence has kind of battled that entry and it eventually led to me not taking the trade. And now, I'm just here sitting while people are enjoying their wins. And that's not a problem though, because this is just part of the learning curve, right? This is what you get when you're learning. So again, this trade also would have been valid, reaching these lows here. This is actually, I think this on a 15-minute time frame and look at some of these lows here some resting liquidity, but again, we're sitting in a 4 hour fair value gap, so not really the best confluence for a trade. But then again, not a bad trade to take. Also, the reason why I didn't take it again, 10 o'clock news coming out. This candle printed at 9:51. Also, some people even took this but got stopped out of it, so they would take this and target this low here. Again, news came out and printed upwards. So that's kind of the fear there. And that's why I don't trade around news. It's literally always about certainty and context. So when news is coming out, you're uncertain, you don't take the trade, right? That's kind of the whole idea. And I'll probably make a video in the future about why I trade futures in the first place and not options or Forex. And that has a lot to do with certainty. So again, a lot of fear, but learning from that fear, right? Me learning, you guys learning from my mistakes, and moving on from that. So going forward, what I could take away from this, one, get more familiar with shorts, backtest a little bit more. Now, I'm not as big on backtesting as I am in forward testing. I think live markets are a lot more useful, and like for newer traders, I think paper trading is much better. But seeing these candles print is a lot better than, let's say, if you were to just go back to replay mode, and skip through it. Right, you get a lot of different feelings, mixed emotions. You kind of get the full bag as far as trading goes when you see live trading and you see the candles print as opposed to just clicking through candles, right? This is different, right? Just clicking and seeing candles print is much different than sitting here and almost watching paint dry, right? You see, if you look at this candle print right now, you see how slow it moves. You see that it might move downwards, give you some conviction for shorts, and then pump back up, right? So that's kind of a whole different beast, and that gives you a bigger and like a closer sense of how the market plays out and how price action actually moves. So for anyone that's looking into getting into trading, I recommend one, back testing. Yes, it's always a good thing to get familiar with the strategy, but forward testing is a lot bigger as far as your psychology goes, right? And kind of understanding how psychology plays into you taking your trades or trading in general. So yeah, moving forward, a bit more back testing. Again, forward testing is always a good thing, and now we're kind of leading into a market that is much more bearish in the first place. So that's going to help us with, taking some of those trades and getting our confidence up. But like I said, at first, confidence was always high. When I first started trading this model, I was hopping into trades pretty easily, pretty freely. And that led to me taking some losses too, right? So again, learning curve, I have to find that happy medium between being confident, but not too confident where I take trades out of a fear of missing out. And having confidence to where underconfidence doesn't play in and I take or miss out on trades like this, right? This is a huge trade, a lot of points, a lot of money to make here. And this could have been an easy full port or a half port to pass these fundeds. So for now, that's kind of it. Thanks for watching.